Hey traders. In this video I want to do a walkthrough of the 10-point trade I just took in the ES. It's intended as a teaching resource for those who have the tools and are looking to learn how that I use them intraday for trading. It's also for anybody who's curious about how I trade, so you can make an informed decision about whether this is good for your strategy. Let's take a look at the charts. So this is a screen capture of the trade. And I'm just going to click and drag through the screen capture and talk about the setup. Now this is, you could see right here I have a trade pended. So I want to show where things were and what I was thinking and why I pended a trade when I did. So really quickly, yesterday the market moved into a ranging mindset. Now that means that the market wants to price in the direction of the trend. But there was a special feature about yesterday, which is we had some bears. So I was expecting ranging, but leaning bearish. So what could happen today, if I can just draw this and show you what it looks like, is if we keep tension down, then by the close, it will be in a bearish trending mindset. That's what I was seeing coming up. And since we had some bears, my expectation was to see bears try again to see if we could get the bearish trending mindset in place. And so I believed that they should show up and we should find trend traders. So the situation that I was looking at was here. The velocity was positive. Well, in this case, it was +5. But the fact that it was positive was a bullish idea generating liquidity that bears could sell off. So I was expecting bears to come in and use that to sell off, and this would result in the market staying bearish. That's what I was looking at. We had right here some buy orders coming in. The trapped traders, this is the trapped traders trapped orders indicator, and it's looking at volume across the New York Stock Exchange. The reason that that's useful is that typically buyers in the stocks don't realize they're being used as liquidity for sellers in the index and futures. So that's what that's tracking, is looking for buyers in the stocks while I look for a short entry in the index market. So that's what that is. Those are the things that I was looking for. Just to make this very clear, a good trade is a predictable one that plays out exactly like you expected. And that's what we were getting here. So let me push play on this and we can go through. So it filled. I put a stop loss, and I wanted to see the velocity number move back down as a result of bearish trend traders selling liquidity. So I'll fast forward a little bit. You can see the velocity number here did tick back up. Do you see how it ticked up? Let me zoom in on that. You see how it ticked up a little bit there? I wasn't the biggest fan, but I was giving it a couple minutes. I thought it was a great opportunity for what was going on. So you can see it ticked up a little bit. I didn't like that as much, but I gave it a minute and it was okay. Okay, so the trade moved down. I was just moving this around here. I put a take profit on it, and you can see what happened here. Let me just point it out so that it's not implied. You guys can see this directly. That the velocity number pushed up and got sold off. The bears used this as liquidity. That's going to result in tension staying down. That's the whole thing that I'm looking for, is that I expected it, and we had the possibility space in front of us. So you can also see decay move down. Our buy orders turned to sell orders. So you can see the red right there. And now it's moving down. And the sweep orders are what happens when institutions trade, trend traders participate. So it swept down. I'll fast forward a little bit more. And it got down to my position. We can watch it fill right here. You see that? Did it fill yet? Okay, it filled. So that was the 10-point trade I took. I want to make it clear that good trades have to do with market structure, expectations, possibility space. I use tension to build the structure. I use the momentum numbers to find market constituents, buying and trading, the the bullish or bearish trend traders. And then I expect entries to show up and play out the way I want. And when all those things line up, it makes for really good trades. Good trades are predictable and expected. They're not signals that show up suddenly in front of you. So if you have a system that has that, you might be struggling from not understanding why a trade did or didn't work really well. It's that you don't have a system that can look out about a day or so into the future and build expectations and possibility space in the market. So that was this trade. I hope it helps teach everybody how I think and the way I'm using these tools. And as always, good luck trading.